Welcome to this Tax Justice Network podcast, looking at some of the findings of the 2020 Financial Secrecy Index and its relevance for OECD countries. I'm Naomi Fowler from the Tax Justice Network's monthly podcast, The Taxcast, and I'm speaking to the Tax Justice Network's John Christensen. An interesting story with the Financial Secrecy Index is that if you look at the OECD member countries and their record and their assessments, they're actually responsible for almost half of all global financial secrecy. And yet, of course, the OECD, largely a rich country club, as we call them, they are responsible for setting the international tax rules.
Yeah, this is an extraordinary and really unacceptable situation. The OECD has been making the rules for decades, well over half a century, and OECD countries generally follow what I call the golden rule. Those who have the gold make the rules. But that doesn't mean that other countries which aren't members of this rich world club are stuck with this situation. There are many ways they can take action against secrecy jurisdictions to protect themselves from their activities. So, for example, they can block market access to any company that doesn't disclose the ownership of offshore subsidiaries. They can block state procurement, any company which operates from a secrecy jurisdiction. They can junk some of the useless double taxation treaties they have with OECD member states and apply high withholding taxes on payments to companies in secrecy jurisdictions. In other words, they can take quite a number of measures to kick back against the OECD countries which are secrecy jurisdictions. And these kind of sanctions can be effective. And of course they can also insist on full automatic information exchange under the Common Reporting Standard. They can insist on full country-by-country reporting. And they can take strong measures to sanction banks and law firms that enable their clients to shift dirty money and engage in tax evasion through offshore secrecy jurisdictions. But I think if we look at the bigger picture, non-OECD countries should recognise that OECD member states are only interested in protecting their own interests and cannot even begin to pretend that they are representing the interests of the rest of the world. So if the non-OECD member states, in other words, the rest of the world, want to become rule makers, not rule takers, then they need to reject the pretensions of the OECD member states to be the rule makers. We need a global, legitimate rule maker, and ideally it should be the United Nations that takes on the role of making the rules for the whole of the world.
Thanks for listening. You can read more on the methodology and results along with plenty of other data on www.financialsecrecyindex.com.